we are looking into NASDAQ 100 index futures, Saturday, March 18th, looking into March 20th. I've left my last week chart drawings as it is to see if it really played out the same way or not. If you look at this one, that's the W pattern, and it exactly W pattern played out that. I had drawn this saying that, hey, look, this is a bull flag, and it did play out right that pattern. So it came down here and broke out, and this is the long pattern, that long trend line, the larger trend line on the bigger sell-off that we had talked about, and it actually never touched that trend line. NQ didn't. ES did. ES dipped into, but NQ didn't. So NQ is holding the ES market strong as of now. And I did participate here on this bullish run. I have now a runner, and I am rightly targeting on the top of this area, right around that. So I actually have my runner there, so it gets stopped out, I'm okay with that. But I would assume here on this channel, in this big bear channel, to really try get up here if possible, so somewhere here, right up there, that looks like it's a good area, and test that area there and hopefully sell off. But if it really breaks out, then we are in a true divergence, and that would be great. I would love some divergence and be on a bullish run. I actually don't have any position in ES, just a position in NQ, which I'll get most probably stopped out because I'm trailing it, and then I'll not take a trade. I may just do intraday trades till the CPI numbers, the FOMC announcements are over. I don't trade those days, and those are big move days. I usually don't participate in those days. But if you do participate, be careful, make your position size smaller and be careful on those kind of days. Now, here, pretty much we are in the daily. We're not going to look at the weekly or monthly anything. We looked into that last week. If we take out the extended hours, let's just have a look here to see if we have, there is one gap fill here, and pretty much that's the gap fill that we're definitely looking at, and hopefully it gets there. It's not that far away from here where we are. It's with 12,648. The gap fill is 13,260, so not that far away. Hopefully it goes and fills the gap. I don't like gaps, but if it doesn't, we will see what happens. Now, what's my plan? My plan is twofold. I am going to wait for getting stopped out. After that, after FOMC, I may want to try a short around this area based on price action. So if the price action, and we will talk about a little bit today on that on NQ video here, if the price action shows me that at a particular level the price is hovering, that means you will go into directly into that. So let's look at maybe 180-day, 1 hourly, and we will try to actually even go further, and we'll look at 5-day, 15 minutes. So what happens when, so this is the market here. Previous day, let's even go to 10 days, 30 minutes to have a better view. Market sold off. You may have participated here. If you did not, participate the breakdown of that one, this is your participation point. Market always gives an opportunity here, and you could have taken it out here, so short there. And then the market started moving. This is the 30 minutes. The market started moving sideways. So if the market sells off, goes back up, sells off, and that is a level, for years and the market starts moving sideways, that's where you start thinking, okay, is it getting rejected at that price? So how do you think about this? Sellers are in control. Why suddenly did they stop selling? No, they did not stop selling. This level is an important level for buyers. Buyers are taking all sale orders, and if buyer are taking all of the sell orders, what does that mean? Are the buyers exhausted, or the sellers are still in control? And you can only tell that if the market starts moving this way, the sideways. Buyers show up, got rejected by sellers. Huge push, got rejected. Another huge push, buyers successful in 30 minutes. So you haven't participated yet. Then it starts selling off again. Sellers trying to push, buyers are here to reject right at that level where they rejected, right? If you are still not sure that you want to participate and you want to, I would participate here, like in this candle. I would participate. I would, on the open of the candle, I would go in and I would have a stop right at the bottom here. So if it is 11,797 and the candle opens at 11,839, I'll have like 11,740 stop. So this is 797, so I'll have like a 100-point stop, and I'll just then ride this all the way to this level, which is my level here. If you don't want to do that, you can always participate after the break out from this level on the top from here, and then ride up, which is much more safer. So it is important to understand what's happening here. So now let me show you another area where that may be something also not correct. Market sells off, got rejected, and starts going up. Why not participate here? Hey, buyer showed up and I'm going to go up. It's going up, so buyers are in control and I'm going to just participate. That is the whole second touch thing. So if buyers are in control here and the sellers sell, buyers showed up, started going up, how do you know this is like not some basically stops getting taken by algos and not just buyers showing up? Usually buyers will try to accumulate. Algos usually don't accumulate. Sometimes algos do, but usually they don't. Buyers will try to accumulate. Buyers will try to accumulate. Sellers will try to accumulate. So you want to look for that kind of accumulation, and then decide who's in control and answer that question, and then participate in the market. That's what usually I do. So now who is in control here? What will happen in the next trading hour, in the next regular trading hour? The market has gone up, up, up. Market has gone up for many days now, and now it has been accumulating here. Now this is a resistance level, and if buyers are here in control, then what do you want to see here is that it keeps accumulating sideways and tries to break this resistance level. It breaks from the bottom and tests from the top, we go in. I've talked about this again and again, but I wanted to show you and remind you that how thinking in this way helps in figuring out your trade when you're trading. That's all I had for today, and we'll go back to the daily again and we will conclude with the plan. So as always, break out and I'll try to see if there is accumulation, and if this resistance level is broken and tested from the top, I'll go with my long. If not, I will participate in a short testing these other support areas where I will cover. As always, keep your stop losses tight, your losses small, and your profit at large. Thank you for listening.